Hey everybody, hope everyone's doing well and had a good day. In this video, I'm going to briefly review the Emini 5-minute chart for Wednesday, August 6th, 2025. Let's just scroll back. There's a small gap going into the day, so we can assume the Globex overnight session was largely sideways in a trading range. When there's a small gap like this, I like to just look at the RTH chart. I'll just look at the prior day's regular trading hours chart. I'll take a look at Globex, but when I'm trading, I'll just look at the chart like this and look at today as a continuation of yesterday's patterns. Small gap, you expect the gap to close within the first hour or so, and that happened really on the first bar of the day. We tested the gap, the close of yesterday, and we actually closed the gap on bar 2. First few bars of the day, largely overlapping one another. What happened yesterday leading into today? What's the context? Here's a major swing point, the bar 52 high. The market's in a trading range at this point. We had this big bear swing down, but then a double bottom reversal to about a 50% pullback of the sell-off. At this point, the market's probably in a trading range. It might be a broad bear channel. It's a 50% pullback or so, still below the start of the bear swing. But too many bars, there's about 35 or 40 bars up for the bulls, and it's deeper than a 50% pullback, so this is not a strong bear trend. It's probably evolving into a trading range. If that's true, there's probably support, buyers below. We have some open gaps here, open gap here, so this will be support, this will be support. There's layers of support below. And after 3 pushes up, the market corrected for 2 legs back down, testing that support. And here we are going into the day at support in a trading range. And we have, it looks like 3 legs up to bar 7. From 78 to bar 1 is leg 1, pullback 3 to the outside bar 5, leg 2, pullback, leg 3, up to bar 7. You can also start the channel line back here before the bear swing was over. It's common to see a high that you use in a bull channel in the old bear trend. Even though this went to a new low, it's okay to use that high. So here's a bull channel line. This is a dueling lines pattern. It's a bull channel line, but it's also a possible double top with bar 52 yesterday. So bar 7, big outside bar. It's a very strong bull breakout bar, but the context is not very good. When we factor in the leg count, we know it's leg 3. We know the market is in a trading range. I would suggest that everyone has a system for chart reading and for assessing context and for determining whether the market is in a trend or a trading range. Obviously, trends are composed of range expansion and range compression, which means there are periods of breakouts and periods of trading ranges, and the trading ranges are minor and they become flags. They're minor reversals that lead to trend resumption. And trading ranges are composed of minor trends. But for big picture, you really need some kind of mechanism or system for helping to determine whether the market is in a trend or a trading range. And when you look at this chart, is the market in a trend or is the market in a trading range? To me, the market seems to be in a trading range. We have mostly overlapping bars, especially on the open. And if you take the low of 78 to the close of 1 and measure the pullback depth, TradeStation has this Fibonacci retracement calculator. Low of 78 to the high close, to the lowest point in the pullback, it's about a 75% pullback. And if we measure the next one, low of 3 to the high close of 5, to the low of 5, it's about an 88% pullback. So pullback depth is a hint for context, for determining trend or trading range. And binary decisions are the most simple, and I would definitely recommend formulating your thought process and flow chart into binary decisions. It's either a trend or it's a trading range. If you're getting 75% pullbacks and 88% pullbacks, is the market in a trend or a trading range? It's probably a broad channel or a trading range. You don't get 75 plus percent pullbacks in strong trends. Also, we are below a major lower high. Swing point 52 high, strong bear breakout, got a second leg, and we're testing back to that resistance, but we're still below it on bar 7. So 7 largely overlapping the prior bar, deep pullbacks, leg 3 below this high. So there is no breakout until there's a breakout. Bar 8 did break out, but it's a small breakout bar, still leg 3, still probably a trading range. Are you expecting a bull breakout of a bull channel? Are you expecting the 25% of the time outcome where we break out of a bull channel and rally in a strong trend? Or is it more likely that the breakout of the bull channel fails, reverses, and tests the bull trend line? More likely, we're going to reverse, and this is on the smaller time frame where you can see the wedge more clearly. You expect a reversal within 5 bars and then a test of the trend line. So 7 and 8, it's a breakout and follow through signal, but it's leg 3 at the top of a trading range. It's probably a better fade. If we think about the trader's equation, stop below 7, think about the bull case, buy the close 8, stop below 7. You buy the close 8, 1 times your risk is your target up here, and here's your stop. You know you don't have high probability. You're taking leg 3, you're at the top of a trading range. Markets are resistant to change, and 80% of breakouts of trading ranges fail. 75% of breakouts of bull channels fail. So if you're buying here, you're taking a lower probability trade, and you can do one of 2 things. You either need a tight stop, maybe below the low of bar 8, and you go for at least 2 or 3 R. Or if you're using the wide stop, you still need that good risk reward to make up for the low probability. So your target would be somewhere way off the screen, which is obviously very low probability. So either way, if your reward is huge, or if your risk is very small, like here, then you have low probability. If it's a low probability buy, it's a high probability sell. Everything has an opposite. And that's why, to me, it's more reasonable to fade 7 and 8. So rather than buy the close 8, you sell the close 8, you put a stop and measure move up, and you go for the target at the bar 7 low. And we tested that trend line and then some, but we tested that bar 7 low, the first target, the trend line target. Now at this point, bear breakout, 3-bar micro channel, big, small, big. But now you're forced to sell at the bottom of a trading range, and the risk is big. If you're selling the close 10, remember, or 11, if you sold up here and you're holding short, there's no difference between if you sold up here or sold instantly at the market here. It's the same trade. So your stop is far. It's the same problem the bulls just had on bar 8. You're not really breaking out below a major low. The major low is down here. So you're still above support. This could be simply a sell vacuum test of support, and there is no breakout until there's a breakout. You also expect at least a pullback to test that pause bar. Big, small, big. Usually you test the low of that pause bar. You're also at the bottom of a trading range, and this is the buy zone. So the probability is that we're going to revert to the mean and go back towards the middle when we test the low and when we test the highs. So selling here is not ideal. It's aggressive to buy. You can wait for bad follow through, like bar 12. Bears fail to get follow through. They fail to get to that low. 12, it's a stop order buy, lower probability because small risk, big reward. It's after a 3-bar micro channel, which should get a second leg down. In this case, we got the reversal without the second leg down. You could say the bears did get a second leg on bar 13, testing the low close. If you sell the close 11, sell the close 11, disappointed 12, 13 tests the low close of 11, and then reversed up. I apologize, but I'm really pressed for time today, so I really didn't get to talk too much about the chart overall. But that's all I have time for today. So thanks everybody for watching, and I'll talk to everybody soon.